Hello, YouTube. There is no pivot in sight and the stocks are crashing. So we want to ask ourselves whether or not the stock market crash is now continuing because there is a bearish pattern on the chart today we can just not ignore. It is a rejection of the 50 weekly, which is leading to a bearish engulfing candle, which just means that we took out the high from last week and right now we are below. This did not just happen on SPY, it happened on QQQ and it happened on a lot of other charts. So what we're going to review today is to try to just get ready for the rest of the week as we are set to close out into OPEX tomorrow. As we're getting started, I'm going to ask you for a huge favor. If you could smash that thumbs up, I would greatly appreciate it. If you want to subscribe to the channel, we're also going to be live tomorrow for the final hour where we're going to walk you through the close. And we know Friday is the most important price of the week at 4 o'clock. So there is no pivot in inflation fight, but central bankers are easing up. That is the takeaway from today in the ECB. Christine Lagarde, if Jerome Powell is going to be the Grinch this year, well, Christine Lagarde kind of seems like she's the wicked witch. Why? There was no confusion in her messaging today. She was hawkish, hawkish, hawkish. She said, no pivot, more higher interest rates. We got more work to do and blah, blah, blah. So I think that the benefit of her yesterday is that she had Jerome Powell speaking first. And if she didn't see the reaction she wanted, she knew she had to come in, massage her story today to leave no question and no doubt that she is a hawk, which means stocks are going down. So now that we think about the countdown to 2023 and that it's almost over, we had Jerome Powell on the end of November. Then we had PCE, jobs, CPI, Fed decision, and now the ECB. To try to smooth the data out even further, what we're going to do is look here at a monthly chart. And why? Well, because we talked about 38952 as the threshold for my bull thesis. I'll remind you where that comes from here really briefly. We go back to 2020, where when we start an expansion of more than 2 months, on the third month, we come back and test the 2-bar look back and then bounce. Here, that was 294. We bounced off 296. In 2018, again, we come back down to 50 MA. And on the third candle, what do? We come down to the 2-bar look back. This is 270. Here we bounce off 272. So it's a perfect story. And remember, this means it has to hold all the way through to the end of the month. It's only December 15th today. We're only halfway through the month. But as of right now, the bullish potential is not zero. I would just say it's possible we're going to be bullish. I just don't know if it's going to be probable. And this area we closed at specifically at 389.63 is right around that area. There is a lot at play right now because there is OPEX coming up. There were a ton of options for today. As a reminder, we now got 5 chances to lose every week with 0 DTE happening 5 times a week and the big show coming in tomorrow at 4 o'clock. So as of right now, it is extremely hard to try to find a bull thesis. So what do? We defer to our bear thesis. I've already been positioned going into today, and I think it is a very bittersweet day. I'll tell you why. It's bittersweet because it's bitter that I know the average person watching is probably getting quite hurt today. How do I know? I have been there. I have done that. I did it again. I went through that yesterday. I want to leave you with a little bit more hope today because, as I mentioned, if you're watching the video, all I really ask in return is that you smash the thumbs up and keep watching the videos. That's your best goal to try to learn and improve. And if you want to trade with me, Justin from YouTube, you can join us by clicking on the link in the description where we have a 14-day free trial. However, think about this. If you're watching me and you're like, man, this guy seems to know what he's talking about. For years, not for a little bit, for years, I had no idea what I was doing, which means I was making the same mistakes over and over, over and over, and over and over. There was no one for me to spot check me, to tell me what I was doing wrong, or to be the devil's advocate when we're looking for an alternative. And the super ironic part of is that I think, not I know, I think, again, I think that even the people who were bearish, well, they got punched in the face. Why? We got a bearish engulfing, which implies we went to a new high of the week. And this is the most bearish reading we have had on here, I think, since we started it. 63% of people think we're going to go down. I don't see a lot of people commenting about being proud about their bear positions right now. They're realizing profit, but I believe, again, not I know, I believe that they might have mismanaged the positions, and maybe they're regretting that. That's what I believe. Why? Hey, if 2 out of 3 people are super bear, well, why are they? Why aren't they talking about it? That's like really important. And here we are with a bearish engulfing weekly candle at the low of the month. with no pivot in sight, and with the Wicked Witch and with the Grinch. Cool. What's really important about this too is that we're now going to be going into the seasonal part of the year where the volume's going to start drying up, notably on the 20th, but we have half a month left. So whatever trend is established is going to be very important. And again, I'm going to give you a little bit of a more bearish tilt here. Why? Well, because this is the pattern I've been using since the October low. If you remember correctly, and you've been watching the channel for any length of time, that is when I started calling for us to reverse after we tested this 200 weekly here. We hit the bottom of the channel on the third test. We bounce up. We formed 10 back-to-back higher highs. What do we got here? Well, it's 9 back-to-back higher highs, 8. It was actually exactly 8 before, and then we fizzled out here. Now I look back in hindsight, that's exactly what happened. We had 8 till the top, the one where we don't quite, and then we bearish engulfed. Cool. That's exactly what we have here. And now in hindsight, what's actually super ironic is that we now almost even have a test here at the 50 weekly because it's curled down. Our high is 4,196. We're off by about 30 cents. And at the low of the day, this was at basically our high of the week. So we did tag it just like we did back here. And the pattern looks eerily similar. Remember, this is a weekly candle. So we're not going to see what it looks like until 4 o'clock tomorrow. So come back for a free live stream with me, Justin from YouTube. If you want some free help, I will be there. We're going to be here live for you for the final hour going into 3 p.m. tomorrow. And we're going to watch this really close to see where we're going to go, right? This right here. So again, I'm bearish right now. I have bearish positions. If you want to see what those are, I encourage you to join us for that 14-day free trial. But what I want to try to do in these videos is do what I've done before. When I'm confident, I talk confident. When I'm not confident, I say, I don't know, maybe this, maybe that. And now I'm pretty confident. Yesterday I said, more pain ahead. Well, here we are. This looks like a pretty painful day. And we'll talk about that in a moment when we look at the heat map here. There are some glimmers of hope, though. So if you're still watching, let's just go through it. The glimmer of hope is that it is never too late to admit you're wrong. It is okay to be wrong, not okay to stay wrong. And at a certain point, if you're bullish, you need to ask yourself whether or not you were in for the same reasons. So are you staying in for the same reasons you entered? If the answer is no, you're probably being a little bit greedy, probably being a little bit of a pig. Why? Because you're unwilling or unable to admit you were wrong. Everyone gets wrong once in a while. No one's going to be 100% correct in the market. The question is whether or not you can survive to trade another day. And if this is what's setting up here, oh my goodness, it is time to be very, very mindful. So let's go through. Looking here, why is this so similar now? Well, because we actually tagged the 50 weekly. Let's zoom in a little bit closer to see this one candle here specifically. So let me actually delete these last two lines and I'll show you why. I will confirm this when I do my weekend video on Saturday, but this is what I was waiting for. I wasn't confident what was going to happen because look, if we were bearish, man, that was like a really hard move for us to hold on here from last week's low to this high. That's almost a 5% rally, 4.5%. Yeah, it's okay to be bearish, but we got to see the confirmation. And now we're starting to really see it. So with this, let me actually just get rid of this last line here, and then we'll just compare them side by side. And I'll go in depth for this this weekend. And again, I have a message of hope if you want to watch for a little bit longer here. So we tag the 50 weekly. We bearish engulf. Check. We're on the 10th week. Check. We're going to watch the volume 2. Let's see if it starts ramping up because here it was just on par. Crap. That's like where we are right now. We're on par. There's no capitulation yet. We're not even into fear yet. We're just back to neutral from yesterday. Bearish engulfing. What else happened? Look at the last 3 candles. They're all roughly the same area, even the last 4. What do we got here? 1, 2, 3. We close below them. As of right now, we're set to close below them. That is not good. It is not bullish. It is not time to be in here bottom fishing. Why? There's nothing bullish. We're also below last week's low. So if you're trying to be a bull and we're below 3918 on SPX or roughly 392 on SPY, you're dead wrong. You're buying the wrong dip. This was a dead cat bounce that rejected off last week's low and then bearish engulfed on basically every single time frame. So instead of beating this dead horse, everyone's seen the 2008 to 2022 comparison, happened to have traded it accurately. We have to realize now that if we're bullish, we are these fish swimming upstream. I've used this analogy before, but at a certain point, you can choose to stop trying to jump into the next pool higher. Why? Do you know what happens to a salmon when they get to the top of the river? They're dead. That's the goal. They swim to the top, they lay their eggs, and they die. Is that why you're swimming upstream if you're bullish? I don't know. Maybe you want to reconsider that. You got punched in the face like we talked about yesterday. Now the question is what we're going to do. So it's really hard to admit you're wrong. How do I know? Again, been there, done that, did it again. We talked about it yesterday, did that for years. So if you're still watching now, again, I would really appreciate that thumbs up. If you don't mind, please and thank you. But if you're still watching on a day like today, it is really easy to be a team player on green days. It is extremely difficult to be a team player, to be motivated, to show up, to lose money on a red day. And remember, this is now old. It's like 3-4 months old. So it's gotten worse. We are off to the worst start for the 60-40 portfolio, which means 60% bonds, 40% stocks in more than 100 years. Just let that sink in. This is the hardest start to stocks in the last 100 years. If you're still showing up, still motivated, this is going to go away. The recession will end at some point. But until then, it's going to be very painful if what happens continues. Look, Dow Jones is out for its worst day in 3 months, falls more than 700 points as recession fears grow. That sounds pretty bleak. Yeah, it does. And this might just be the start. So let's go through a few more things here. Looking at the heat map for the day, take your pick. Everything's red. However, let's be mindful of this. Why? Tomorrow was OPEX, and there's a whole bunch of options expiring. So I'm going to show you a few things here. We talked about the 3-month. Before we look at that, let's look at the 4-hour. Whoa! What's going on here? It's all flat, if not green. There's barely any red. So in 8 hours or today, man, red AF because we gapped down. Yep. In the last 4 hours or in the afternoon, it's basically flat though, which means the prop job or the plunge protection team, yeah, they're getting to work, right? They're plunging, they're plunging, they're plunging. They are plunging. Why? We'll look at the options and we'll look at the data that drove this reaction. Remember, there's 5 chances to lose every week now. So we got, I don't know why this one's actually a monthly expiry, but it's labeled as that. So we'll just look at it for what it is. Here we're looking at SPY on the 16s. And without looking too deep here, we just look at basically 389 on calls. Man, lots of volume. It's busy, busy, busy. For the puts, starting at about 391 and lower. Yeah, it's busy. So what do? They closed it at 389 or basically at max pain for today. Why does that matter? Well, let's look to tomorrow where there's even more. And the fact we closed below 390, I thought we were going to save it. And again, I'm actually bearish. So the lower we close, the better it is for me. But we want to be mindful of what the chart is telling us, not what we want. Because I just want us to fade to zero. That's what I want. I'm not fully positioned, but man, that would make me feel good. That's not our goal though. We don't want to feel good. We want to make money as much as possible. Looking here to tomorrow, which is going to be the monthly expiry on SPY in the 16s. We have a lot of open interest here. So notably 390 to 385. That's like a lot. Looking here at the call side, well, they still want it. I don't know if they'll get it. 390 to 395. And there was a whole bunch up here at 400 too. So where's max pain? Let's see what happens to the conversion here. Does the volume convert into a higher number? Or does the open interest actually decrease? If it decreases, it means they're closing out positions. If it increases, it means they're holding overnight. And what's so interesting about this is that as we're closing again here at roughly 389, we can see what an at the money put is worth. For how long? For one single day. For one single day, you have to pay $3.20, which means we have to be at 389 minus 3.2. We have to be at 386 for you to get your money back. Whoa, is that why they're buying this put spread? Yes. Same thing to the upside. However, these calls are priced significantly lower. They're only worth about $1.50. So ask yourself, where's a more premium to burn? Well, there's clearly more put premium to burn. So if the market makers are in control, that's what this would look like right here. It would look like, right, fade it down. They know they're going to lose, and they prop. It's a prop job. And we're propping at the low of the week. That's not strong. However, we're here. We're flat. S&P 500 is basically flat in the final 4 hours. That's like really impressive. And why would they do this? I'll show you. Because right now, what I look for as we're going into monthly OPEX is the next monthly expiry. And right now, as I look out here to, we're looking out to January or the next monthly for SPY on the 16s. The 16s just means 8 strikes below and 8 strikes above. It just means what is most probable to hit. If we look here, where's the volume? Oh my goodness, it's right here at 390 and 380. Yep, with it gushing at 390 and gushing at 385. I'm sure there's a whole bunch at 400. There's not a lot of calls. There is some, but we'll just focus on what is notable here and the volume, which means the people who were driving the charts lower today, they're not just positioned for Friday. They're positioned for at least into January. So getting above and below 390 is like, it's important for tomorrow, but going into January, that's where they already want it. And it's like really important. All right. A few more things to look at here are going to be, actually want to show one thing from our platform because I think people might not fully appreciate what to do with some of the data. And even though I did not action this, I've been pretty bearish on Tesla. I haven't made a position, but let's look back to the premium and see whether or not we can understand what actually happened here in terms of betting. We're going to go back to our calendar for November 1 to December 15, or in the last roughly 45 days. We're now going to look at the flow overview, and we're going to see here what the bets have been. So SPX is at the top for both. What we're going to focus on here is going to be Tesla. 7,877 million in premium. Looking over here at the call side, basically 1 billion. There is $7 billion betting against Tesla just in the last 45 days. And I don't know what the hell's going on with Elon Musk, but man, this guy is doing a fantastic job at destroying wealth, not just for himself, but for his top most loyal people. I'm not going to talk about the 4 billion or 3 billion he sold today, but whatever. 10 Tesla investors lost 132 billion from Musk's tweet fiasco. So what happened here? Twitter fiasco, sorry. There's a screenshot here. Elon Musk has lost $47.9 billion in value. Him alone, he lost more than the value of Twitter. And why does this matter? Why are we talking about Tesla? Because normally we don't. Well, because on the heat map, when we look here to the heat map, the Tesla has still been one of the strongest leaders. Let's look at year to date. It hasn't been right now. Let's actually see if we can get that. Anyways, Tesla has been one of the leaders along with Apple. And now Apple has an issue with their app store. Tesla has an issue with their CEO and all this other crap, right? Production, taint of the brand, what's happening in China. Amazon already down heavy. And we look at, well, who's betting heavy against Tesla and Amazon? There's 6.5 billion here short on Amazon too. In terms of calls, it's 300 million for the last 45 days. They're betting heavy. These charts are like down in the dumps. Why are they so aggressive on them? Well, Tesla short seems like pretty smart right now. Down by 50. Elon selling right on the 200 weekly. The man's voting with his money. He said, if the Fed raises rates, it's going to be worse. So I think he's voting with his money, and that's what's happening. So if we look here to the last 3 months, this is part of what I think happened today. I'm going to actually just go back here to the 1 day. I think the reason why we gapped down and flushed, we filled the gap on QQQ, but then flushed more is because I think a lot of people want to do window dressing. Goldman Sachs has said they're going to cut bonuses by up to 40%. That's a big old haircut. So how do you get your bonus? You got to beat the market. How do you beat the market? Sometimes through manipulation, right? That's what we call it. Let's just call it for what it is. So I think they're trying to beat the market. And when the market's green on the month, they have to be greener. That's how it works. If the market's red, they got to be less red. So as we start to look at higher time frames, like 1 week, well, it's like really mixed now. Yeah, because I think that there's tax loss harvesting, there's rotation, there's also the window dressing. Window dressing just means making it look like your portfolio is better than it's not. Same thing here. It's still like really, really mixed. There's no clear pattern. And looking at 3 months, because the Dow and the S&P just had their worst day in 3 months. Whoa, well, it doesn't seem all that bad. But the last soldiers, right, the last dominoes are the ones who are falling. It's notably right over here in the biggest blocks. Apple, Microsoft edging out of green, Google, Amazon, Tesla, all red. Tesla down by 47. So this is like pretty aggressive here. These heavy, heavy bets. And Elon's done a great job to get them paid up. At whose expense? His own. This is silly. I don't get it. I don't understand. I'm not Elon though, right? I don't have that silky smooth Elon brain, elongated brain. Anyways, let's look at the data that drove it today. So there's a few things because I'm not going to talk about the Fed rate hikes and all that. We'll do it on the weekend. We talked about it yesterday. Everyone has an opinion on it. All we really care about is the data from today. So looking at the data right now, the Fed is still hiking. Let's actually just draw on the chart here, make sure people understand too. So they're hiking, right? Which means they're still raising interest rates. And right now, all the warning signs are that the market's going to crash. They're like higher for longer. Yes, yes, yes. And again, do I think Jerome's right? I think he's wrong. I think they were slow to start. I think they're going to be slow to end it. They're going to wait for confirmation. He's scared about the 1970s, even though it's not maybe the most accurate template for now. This is a Fed-induced recession. That's the problem. But the Fed has now told us that they're going to be hawkish, 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 or Jerome is the Grinch. We got Christine Lagarde from the ECB is the Wicked Witch. And now the data is starting to roll over, right? Industrial production in China, 2%. And we don't even know if these numbers are real, right? 50% miss. Last time was 5. That's a huge contraction that happened overnight. And then today, ECB hikes, but that's a hawkish hike too. Man, that was a hawkish one. Core retail sales coming in negative. Previous number, revised red. What happened to initial jobless claims? Less initial jobless claims, the exact opposite of what we want. PMI, or manufacturers, contracted. Retail sales, negative 0.6 during November or Black Friday. Man, WTF. Yes, WTF. The recession is upon us, basically. But people don't believe it. Why? Look, we're at 51. Yesterday we were at 60. We just fell back to neutral. We're not even in fear yet. There's been no fear. It's not baked in. The market's not baking in a recession yet. It's not priced in. So why? And this is the part that I think is going to take time to materialize. But for me, until proven wrong, history going back to the 1970s, the period we're looking at right now, or 50 plus years, longer than I think most people have been trading, let alone alive. People who are watching, right? The young people haven't watched it. The people who were over 50, were you trading 50 years ago? If not, you might not appreciate what hindsight could tell us, because the last time this really happened for more than a 30% haircut is in 2008, in 2000. Then we have to go back to the 1970s and 80s. But the Fed pivot means that they've broken something, right? They when Jerome says he wants to probe, right? Okay, well, I'm going to keep raising interest rates until something breaks. That's basically what he's saying. He's going to stop hiking when something breaks. When's he going to break something? I don't know. I think things are breaking. Look at crypto. Look at what's happening in Ukraine. Look at what's happening in England with their gilt market. Take your pick. There's stuff happening everywhere that's bad. So stuff is breaking, but it's not like systemic. Those peripheral things are going to lead to systemic risk. That is when we're going to either get a true full-blown recession, and that's when the Fed's going to have to pivot, when something's broken. What I heard Jerome say yesterday is that we're moving until something breaks. That's what I heard. Probably going to go 25 for the next 3 meetings. And after that, if we haven't already broken something, we're going to hold there for the whole year. That seems like a big mistake, but he's going to do it. At least that's what he's saying. Is he jawboning or is he overplaying it? I don't know. It doesn't really matter. Market believed him today. And Christine Lagarde came in with a 1-2 punch to knock us out. So if the majority of declines in these bear markets occur after the Fed pivot, why are people so bullish on the pivot? Is that false hope? Would that be showing up here in the fear and greed index? Yes, people were still greedy after Powell said nothing has changed. I'm a hawk. I'm gonna make people get unemployed until we break something, until there is a recession. Basically, we're willing to risk the economy to have price stability. He's worried about his track record. That's what it seems like. He wants to be right. He doesn't want to save the economy at the same time. That's what it seems like. Hindsight's going to tell us who was right and who was wrong. So when the Fed starts to pivot, that's actually when most of the declines happen. In 2018, negative 35. In 2008, minus 58. In 2000, minus 51. And remember, Jerome yesterday said 2000 was a shallow recession. Really? A shallow recession? The market drops by 51%? Please, no shallow recession. That's going to be terrible. I know it. In the 1970s, negative 36, negative 48, negative 27 after the pivot, not before. What does that mean? We got more downside. Wherever we are right now, it's this much after the pivot. 50s, 30s, whatever. We've not even had the pivot yet. That's the biggest problem. No one is ready for this. How do I know that? There's indicators we can look at. So let's look here. And remember, we don't know for sure what's going to happen until the weekly candle closes out. But let's just scan through these weekly charts, not even daily ones. Why? The weekly is where the story's at. And I told you, there is still a glimmer of hope for the bulls in terms of the thesis here that on the monthly we can bounce off 390. I am not feeling very optimistic about this, though. And my default was still being bear. However, I don't just short at any price, regardless. I don't go no stop or just hodl for the sake of hodling. No, I've been there. I've done that. It did not work. So what do we need? FA or fundamentals tell us what go on the watch list. Technicals tell us when to buy and sell. And right now, fundamentally, technically, in the short, medium, long term, it's bearish. Why? That's what I think. That's for me. These are my videos. These are mostly for me. That's what I am looking for. Bearish, bearish, bearish. The onus is on the bulls to fix these charts now. We're still closer to resistance than support, or the 50 versus the 200. Volume's now increasing, but the comparison is still working. So let's look here. Hard reject off the 50 for QQQ. All right. Sorry, for SPY. On QQQ, we fell below the 200 weekly. Bearish engulfing, took out the weekly low, closed below last week's low, closing at the low of the week, low of the day. Not nice. Nope. Meanwhile, the dollar popping off the 50 weekly. Bullish. But got a hammer here. It's probably going to want to go higher. Why? That's what it's telling us. Even with the hawkish ECB, people are still bidding up the dollar. Looking at VIX, it's stuck. Volatility has not been confirmed as being bullish because we're still stuck between the averages. We'll find that out when we get back above roughly 60. And historically, we do not ever put in a bottom until we at least get up to the $40 area. We look back to 2008, 2011, 2016, 2018, 2020. Every single time we have needed to penetrate 40 for there to be an actionable bottom. Goes even all the way back to 2000 and even earlier. So this is like a very reliable indicator saying recession is coming. The 2-year note, well, on this chart here, what we're just going to do is look at a 1 month. Why? Look, this has been the fastest rate hike cycle ever. It's not like we're going up. It's a straight line higher. This goes back to the 1980s, the same period we're looking at for that pivot. Well, this is the Fed has been the most aggressive ever. It's a straight line up, basically. Even back here in 2003 wasn't as aggressive. Even back here in the 1990s. And when we look here to the 10-year note, let me just see what's going on here. 10-year note. 10-year note, same thing, right? Pretty much a straight line higher. It's throttling 350 right now. Looking at the twos tens or the inversion. This is also a recession indicator. When it breaks through one, it's usually a year later that we confirm the recession. When is this? This is April of 2022. So April of 2023 is when we would expect for us to have confirmed there is a recession. What's a recession? It's 2 quarters of negative contraction, or 3 months times 2. So what is that? It's 6 months. We're not going to confirm we're in recession until either end of March. If we're in a recession right now, which I don't think we are because the Fed is telling us on their GDP now that we're not, we're currently expecting 2.78% Q4 GDP expansion. So when is a recession going to be confirmed? It'll be confirmed with Q1, which ends in March of 23, and then 2 quarters of contraction would be at the end of June or confirmed in July. That's just over a year after we got over the 1.00. Another recession indicator here. All right. Now we're going to go back to weekly charts to see what is happening with ES, NQ, and everything else. Why? Remember, we had rollover last week. We talked about that. And we also have a bearish engulfing candle here. This got an artificial roughly 1% rip on that rollover. So even here, I was watching this all day. We came all the way back down to support. We throttled here for a long time, and we found liquidity. That's the spot we found it. That's where buyers showed up at the low on ES. Look here to NQ. Looks very similar. Eked out a gain over the 200 weekly. It penetrated it. We got a bearish engulfing weekly candle. I think we technically closed right on that 200 weekly. Let me see. 11,445, 11,446. 1 point above. Nice. But we did penetrate it. We got a bearish engulfing candle. That is bearish. All right, let's look at the next one here. RTY. Bearish. That's a inverted hammer, right? A gravestone doji. I don't know. Lower low, closing below both averages in a single week. Whoa. Yeah. Whoa. Now let's just jump down here to these trillion-dollar companies, because these are the last soldiers. If these things start falling, man, it's going to start getting even worse. These are the companies worth, used to be worth $1 trillion. Apple here, well, it's not quite a bearish engulfing, but it's right here on the lows. It can't hold here. We're probably looking for 110 on the 200 weekly here, roughly 110. Oof. Goog holding up. Gravestone Doji, green in the week. I don't know. Looks stronger than the others, but man, one strong company is not really enough. Stuck between the averages. Goog below both. Yuck. Bearish. Sorry, not a bearish engulfing candle, but lower low, lower high, below the 200. That's pretty bare. Amazon, yeah, it's stinky. It's in the dumps here. Whoa. And those huge bets against it. Whoa, I don't know what they know that I don't know. Tesla, man, Elon's creating the sell-off. I don't understand it. It can't rally. He's sold like, I don't know, 20, $30 billion in stock now after he said he wouldn't. That kind of seems like a red flag. Nvidia holding up with that CHIPS Act. It's doing better. It's basically flat on the week. Gravestone Doji, though, that usually leads to more downside because we're closing at the low of the candle. Meta, Gravestone Doji eking out 25% gain here, 25-cent gain, sorry. And now let's look at the ETFs. Let's look at the Dow. Well, it was really strong. And now it's like pretty close to that 50 weekly here, the blue line. I'm watching it close, especially into tomorrow. Looking at the Russell, we already looked at this one here below both. Got crushed. I'm looking at RSP, below it now. 2 weeks below. That's not so nice. NYA, 2 weeks below. That usually signals a trend change. All right. XLK, again, excluding Amazon and Tesla. This is the Spider managed ETF for tech. Basically a rejection here off the 50. Not quite a bearish engulfing yet. 12867. No, we got 3 cent higher low. 3 cents. That's what's saving this chart. That's not really enough for me. ARC, is that bearish engulfing? High is 38.18, 38.38. Yep. Got it. We got it, boys. We got it. She bought more Tesla yesterday. Kudos, Kathy. Bought from Elon. Nice. This still looks okay. It's the healthcare. One chart looking good is not fantastic, though. Still a gravestone doji. And then XLF, 2 weeks below. That is not good. It's not bullish. I think that's the last one. XLE still looks good. Definitely some harvesting here in terms of profit. Let's see what happens at these relative highs at about 83. But it looks quite good. And then XLU, which is a safe haven, also catching a bid. So I don't know what's going to happen. All I know is that, at least for me, on a macro perspective, which means a monthly candle and then a weekly and daily, I'm seeing everything I need to remain bearish. Am I going all in, no short, just ride or die in options? No, I'm properly positioned, which means that I am managing my trade for what makes sense for me. And I think I actually want to show one more thing here. It's already been a long video, so if you're watching all the way through to the end, let's just look at one more thing here. Why? Well, I like to look at this chart here for the hourly, and normally we don't look at shorter time frames, but I've been using this one here for the last little bit in terms of since the December 1st high of the month that we established, we had that one day where we had, where's December 1st here? Here we go. So we had a single day where we had the biggest bar in the day was red. Well, since then, it's been all green. But since we formed our high here, every single biggest bar in the day has all been red. Let's just make it really close here by blowing this up and then looking over at the lows here. So if we look here at the volume, big red on Tuesday, big red on Wednesday, big red on Thursday. So the bears are starting to squash this thing. I think a lot of people got stopped out on this recent move all the way up to here. And what we did is we went full circle from weekly resistance at 4,100 right down to weekly support at 3,900, 39.10s. That's where we bounced. That's where we finally found that support, where I showed you with that weekly bearish engulfing candle from last week's lows. So I understand what's happening here. Do I think we want to short the bottom? I don't think so. We don't usually want to short support. And right now we're bouncing off my green line, which means support. I don't want to touch that. We got a key nasty downtrend to break this area, though, going into Friday at 3 and 4 o'clock, which is going to be the close of the day. So come back and watch with us on YouTube tomorrow if you want to do that. And if you want to agree with me, Justin from YouTube, come and click on the link in the description for a 14-day free trial where you can see everything in my current portfolio, exact buy levels, exact sell levels, what I am looking at in terms of buying, and most of all, you can get personal help from me. Come tomorrow if you want free help. Might not be able to get answer every single question. We'll be right here live at 3 o'clock. If not, if you join us at thealgo.com, we have up to a 44% sale off right now, and you can get personal help from me, Justin from YouTube. If not, thank you so much for watching. Please smash that thumbs up, and I look forward to seeing you tomorrow. Thanks so much.